Good evening. I hope you all had a great day. Today was a terrible day for the market, as the IMF lowered their global economy estimates and warned over the rising debt levels. On top of this, fears about the continuing growth of coronavirus cases are starting to enter the market. The S&P 500 ended the day lower by 2.58%, while the Dow had a worse loss of 2.71%. Finally, the Nasdaq had the best day, but was still down 2.19%. This was the worst day in the market since July 11th. Getting right into the news, we start off with the estimates released by the IMF. Today, they lowered their GDP estimates, saying that public finances will deteriorate significantly as governments attempt to combat the fallout from the coronavirus crisis. The IMF now estimates a contraction of 4.9% in global GDP in 2020, which is lower than the 3% decrease it had predicted in April. The fund also downgraded its GDP forecast for 2021. It now expects a growth rate of 5.4%, down from the 5.8% forecast it had made in April. The Washington-based institution explained that the downward revisions were due to social distancing measures likely remaining in place during the second half of the year, with productivity and supply chains being hit. In those nations still grappling with high infection rates, the fund expects that longer lockdowns will dent economic activity even more. Regardless, these are just estimates, and there is still uncertainty about these numbers as the estimates rely on numerous inputs such as the length of the pandemic, voluntary social distancing, changes to global supply chains, and new labor market dynamics. Investors are on the watch for a wave of large volumes of selling that may be hitting the market soon. This potential sell-off would be due to various funds beginning to take profits from the large market rally and reallocate their capital to bonds and other assets that are safer compared to equities. The rebalancing estimates vary widely, with estimates ranging from $35 billion to Goldman's estimate of $76 billion. Getting into our coronavirus update, today the World Health Organization warned that many countries across all the Americas have not yet reached their peak in cases. The new number of cases globally jumped by 133,326 on Tuesday, according to the data from the WHO. More than a third of those cases came from Mexico, Chile, Peru, Brazil, and the United States, which reported a combined total of 58,583 new cases in a single day, according to the WHO. On top of this, Florida's situation continues to get worse, as cases rose by over 5,500 in a single day, bringing the state total up to more than 109,000. In addition to rising cases, the percentage of tests coming back positive is also on the rise, indicating that the surge is not due to ramped up testing. The state reported that 15.91% of all tests came back positive on Wednesday, up from 10.82% on Tuesday. While new cases continue to increase across Florida, the average age of an infected person has continued to decline. On Wednesday, the state reported that the average age of patients was 33 years old, down from over 65 years old in March. Governor DeSantis said, quote, "We're not shutting down. We're going to go forward. We're not holding back," end quote. And, quote, "You have to have society function," end quote. On Tuesday, Fauci said Florida, as well as Arizona and Texas, has, quote, "a serious problem," end quote. And while the state probably doesn't need to, quote, "absolutely shut down," end quote, again, officials might need to consider more aggressive interventions to curb the spread of the virus. On top of this, California also announced a record amount of daily new cases, as they topped more than 7,000 in one day. No sector was spared in the sell-off today, as oil and gas led the terrible day, as the sector was down nearly 5% during trading. Utilities seemed to be the only sector that was spared to some degree, and lost nearly 1%. All baskets and varieties of stocks were tormented today. None more than small cap value, though, which lost an astounding 4.49%. Mid-cap value was the only basket of stocks to come close to that performance, as they lost 3.81%. Large cap core stocks performed the best, but were still down 2.42%. The best performer in the S&P 500 was popular grocer Kroger, which gained 2.27%. It is unclear what caused the positive move in Kroger, but they do poise to benefit from restaurants remaining closed or at low capacity, as consumers will be forced to get food from the grocer. The second best performer was Tractor Supply, which gained 1.61%. The reason for this gain is unknown, but surely they are not as affected by the coronavirus compared to a wide variety of other companies. The worst day in the S&P 500 came from the three big cruise liners, Norwegian, Carnival, and Royal Caribbean, as each lost more than 11% today. The cause for the terrible day is apparent, as multiple states, including popular cruise destination Florida, are seeing a large increase in cases. This looks to continue to put these companies in an increasingly terrible situation, as all these companies can do currently is burn cash and continue to push back the reopening plans. The other stock that got hammered the most was popular casino and resort company, Wynn Resorts, which lost 11%. Wynn Resorts is in two tough situations. First off, they are a resort and casino company, which does not benefit from the large increase of coronavirus cases. On top of this, one of their largest properties is in Macau, China. If the trade war between the US and China continues to escalate, their property will surely be affected. Getting into earnings, we start off with KB Home, ticker symbol KBH, which is a United States home building company. KBH missed on both EPS and revenue estimates for this quarter. Non-GAAP EPS missed estimates by just 1 cent and came in with a gain of 55 cents per share. Revenue missed estimates by a large 166.03 million though, as they reported quarterly revenue of $913.97 million, which was a decline in revenue of 10.4% on a yearly basis. Investors did not like the sound of this, and currently have shares down more than 6% after hours. Lastly, we have Patterson Companies, ticker symbol PDCO, which is a medical device company that specializes in dental and veterinary devices. Patterson had nice earnings this morning, as they had a double beat. Patterson beat non-GAAP EPS estimates by 26 cents, as they came in the quarter with a gain of 43 cents per share. Revenue came in at $1.29 billion for the quarter, which was a decline in revenue of 10.4% on a yearly basis, but still beat estimates by a nice $120 million. That is all I have for you today. Hope you all have a fantastic rest of your evening, and as always, I will see you again tomorrow.